Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look. On Friday and this morning, the euro quite remains within Thursday's range. Since September 8, the price has been coiling around the MACD indicator line. It's a blue line on the chart, which is sloping a little bit downward. The Marlin oscillator is tending downward, even while in positive territory. The euro is under market pressure ahead of the Fed meeting. A similar sideways movement has been seen on the S&P 500 and government bond yields over the past week. Markets are awaiting the Fed's monetary policy decision. Our previously stated forecast calls for a decline in the euro since, along with a rate cut. The FOMC also expected to send a hawkish signal. There will be no 3 cuts by year-end, and even a second cut is in a question, as Trump's tariffs had not yet been absorbed by inflation. Target levels are indicated on the chart: 1.1632, 1.1495, and 1.1392. The market may come alive tomorrow when ZEW economic sentiment data for the Eurozone and US retail sales are released. On the 4-hour chart, the price is moving within the 1.1700-1748 range, formed by MACD line, and Friday's high. The Marlin oscillator forms a wedge pattern, pointing downward, suggesting the price will attempt to stay below the MACD line, 1.1700. And we're starting with pound sterling dollar pair with thin low. On the hourly chart, GBPUSD traded sideways in Friday, just below the 100% retracement level, 35.87. A rebound from this level would favor the US dollar, and a decline towards 76% Fibonacci level at 1.3482, which traders could then work through. A consolidation above the resistance zone of 36.11 36.20 would allow for further growth toward the next 127% retracement level at 1.3708. The wave picture continues to shift toward bullish. The loss completed wave downward broke through 2 previous lows, while the new upward wave broke through the last 2 peaks. Thus, at this point, it can be assumed that a new bullish trend is starting after more than 2 months' weak bearish dominance. The dominance proved very fragile, as the news background in most cases did not support the bears. On the 4-hour chart, the bear completed a new reversal in favor of the British pound and consolidated above the 1.3378, 34.35 zone. Thus, growth may continue toward the next 127% retracement level at 37.95. The chart pattern is currently ambiguous, with traders moving the pair in both directions. At this stage, we recommend paying more attention to the hourly chart. There are more levels there and it is easier to walk with waves. No emergent divergences are visible on any indicator. That's all for today. See you online soon.